Is it all coming back? It sure looks that way. The market seems to be showing some signs of improvement and coming back from the horrific past 2 weeks that we've had, or really past month and a half that we've had. Also, Richard Hart is teasing a very important announcement. What could it possibly be? We're going to discuss that. What's happening with the DXY? What's happening with the Fed's balance sheet? And also, how about the possibility that the year 2025 was, in fact, the bear market year, and it's nothing but good ahead of us? And what's going on specifically with Filecoin? All this and more. I'm Cairo Copeland. This is Reinvent Ideal, and you are watching Shut the FUD Up. Welcome, everybody. It looks like for once in a very long time, we are actually having a good day in the market. I hope that's the case. Make sure the microphone is set up correctly. Y'all let me know in the chat if the audio is good. I think it should be. But I'm totally pumped here because a bunch of coins that I've been holding and have been sitting on and have been basically playing dead for the last several years are now starting to get a really good pop. And some of the coins I'm watching that really tell me about direction of the market and everything, they're doing very well too. So that has me thinking for a second that maybe, just maybe,
it's all coming back.
That's what I'm hoping, that
it's all coming back.
Very good chance. And then a little bit later on in the week, I'm going to be saying this a whole lot. Because finally, for the first time in a long time, I don't have to get on here and tell you people this.
Control yourself!
Looks like we may have a lot of good happening here. And let's not get too ahead of ourselves. I mean, we don't want to be way too ahead and thinking that it's all over and everything, or that the good times, it's nothing but good in our future. But it does not hurt to think positively. It does not hurt to think positively and spread positivity. So, before getting into all the top stories for today, let's take a look here at all of the stuff that we always look at the beginning of each one of my streams. We'll start with the market. For once in a long time, it is good. Looky here, lots and lots of green. Now, here's what I'm noticing is that, as we scroll down, we see a lot more green, but right at the top, like these blue chip cryptos, they're still kind of negative on the week. Bitcoin in particular, definitely Ethereum, that piece of trash. XRP, Solana, I was kind of expecting those guys to be a lot more positive than they are because, they've really been like the talk of this bull market if we've been in one. They've been the talk of it. Dogecoin coming back. Cardano, even good old Cardanzo is coming back here. That's impressive. Hyperliquid, very good. Yep, back to above 40. Sui back above $2. And ooh, looky here. Kronos is getting some positive movement. A lot of potential left in this one here. So I think that's kind of like where the blue chips sort of cut off. Now, here's kind of the real storytellers right here. Internet Computer, ICP. And every time I look at that, I immediately think, ICP, we roam alone ever since Inner City Ghetto Zone. Everybody jumps to the Juggalo sound. F out of here if you ain't down with the clown. Yeah, I'm sorry. I was once... I'm going to admit something very embarrassing to you guys. Don't judge me. But back in high school, I was a Juggalo. Yep. If y'all remember the Insane Clown Posse, I was a Juggalo back in high school. That's how I know these songs. So ICP, actually, it caught my attention when it first came out during the last bull run. I didn't want to buy it, though, because it was too expensive, and I kept seeing that all the price was doing was just going down. Because you take a look at this from launch, really kind of right at the top of the first top of 2021 was when it was launched, and it did nothing but go down ever since then. Did have another little bit of a pop here, but it was a pretty disappointing pop in the second peak of the 2021 cycle. And then look at this here. It's been practically flat for the last 3 years, including this year. But now, It looks like it's turning around. Isn't that impressive? Look at that. Woo! Incredible. What do we got to say about it? What's that look like to you?
It's all coming back.
I hope so, because I hold a little bit of ICP. Not that much, but I hold a little bit of it. And man, if this thing can go back to its previous all-time high, I don't know if it can, but man, if it could, that'd be impressive. Because the previous all-time high was $750. That is basically a 100. That's a 100x from right here. I'm rooting for you, ICP. I'm rooting for you just because I was a juggalo. And as a juggalo, I want my... Try not to cuss on my streams here. Doing my best here for you guys. All right. So I see some of y'all are piling in. Tam, my number one cheerleader. Kesh is here. Mr. Barbarian. Welcome, you guys. Now, taking a look at what else is going on here. This is the real star to me. Filecoin. Look at this bad boy. Look at that. Boom. That incredible green candle. This guy had been down in the dumps for a long time. Down in the dumps. Now, take a look at this here. I mean, this chart looks like it's just a giant middle finger being flung at you. You see, the story of Filecoin is it came out at the end of the 2017 bull run, got a little bit of a pop off of the 2018 January alt season. Then it was down. Down in like the $2 range, which it fell below in this current bear market. It was lower in the current bear market than it was in the 2018 bear market, if you can believe it. And we take a look at this here as the market turns around for the next cycle. Well, Filecoin then turns around, and when that money printer got turned on again for the second time, here in June of 2021, look at that. One of the most impressive candles, I think, in the history of crypto, going from $38 to $165 to close on the day, which is incredible. But I think like the wick of that candle was a lot higher. 237 was its actual top there. Since then, man, it had been beaten down so badly, completely beaten down by 2023. And then it stayed flat for the last 3 years. Had gotten as low as $1.56. And then, look at that. Back to $3.66. And that doesn't sound very impressive considering where it's been, but look at that. Up 127% in a single day. Up 25% on the hour. Guys, this is normal crypto price action. This is what a normal bull market looks like. I'm not saying we're in one yet, but this is the stuff that we have been waiting for. This is what we've been excited about and anticipating, is price action like this. And in a true bull market, this is going to be very common across all assets, or across many of them. I don't know if all are going to do that, but many of them are going to do this here. And I noticed this just a few days ago with Filecoin and ICP. And also with Caspa. I was like surprised Caspa was getting a pop right there because a lot of people have been talking so much trash about it. How about this one here, though? Render. This was a coin a lot of people believe was dead, even though it's got such a powerful utility and use case behind it. So many people would want in on this. It's also a good play on AI if you were looking for like those AI cryptos. And this thing had gotten up to a high of, $11.69. And that was in March 2024, which I believe the year 2024 was actually the bull market year that for this cycle. And I'll tell you why. I'll explain my thesis on that later. Then it got back up in December. So it's like we double topped for altcoins in March of 24 and then also in December of 24. Or maybe you could say March, April 24 and then December 24. I think that's when we had our double top for this past cycle. And I'm just rolling with it here, guys. 2024 was the top of the bull market. And then 2025, this whole year has been nothing but a bear market. that's what I'm rolling with here. I'll get more into that. Look at this guy. Fetch, or ASI, Artificial Super Intelligence Alliance. This one is incredible. This is a project that I got into starting in 23, getting on the AI craze. And man, this thing had gotten as high as, $3.10 at our first bull market top in 24. Then got nothing but beaten down. Then look at this here, man. Look at this comeback. 12% on the hour, 76% on the day. Another coin that I kind of classify or put like into that category as well is the graph. Now, I do think there's going to be some retracing on a lot of this here. Don't panic. If you're buying in right now and you see some retracing, I mean, personally, I wouldn't buy in just yet. I'd wait for the retrace. There will be retracements. But don't panic. That doesn't mean anything is all over just yet, because we got to look at what's the context of the retrace. Now, you want some confirmation that the good days have started. You want confirmation of that. And yes, Mr. Barbarian, I will talk about Zcash, because that's an incredible story. But you want some confirmation that we're definitely good days ahead of us? Well, watch Sonic. I'd say watch Sonic, and also watch this coin here. It's called Beats. It stands for Beethoven X. Those two coins got beat down the most during the balancer exploit. They got beat down real bad. I mean, Sonic, it was looking like it was going to be the end of the chain. So if this thing comes back, that's going to be incredible. And also, if our coins in the RH ecosystem come back, well, that's also a guarantee that it's nothing but good times ahead as well. Or it's a confirmation, I should say. Root Network, this is what's really impressive to me here, is GameFi is even starting to come back. Nothing had taken a greater beating in this bear market year of 2025 than GameFi. Because look at this, Gala is up 20% on the day. That's incredible. The Root Network, I mean, they're having any positive price action in general right there is impressive, because they have gotten beaten down. Illuvium is also a gaming token. So if you see GameFi doing well, I think then we could make a case for saying, hey, bull market just started. I'm not going to say that just yet, because it's still 2025. I still say 25 is the bear market. But man, that's impressive. I got a lot to say about Filecoin a little bit later. Let's take a look at the Zcash story here, because yeah, Zcash, incredible. Like just today, it added $100 to the price tag. Let's have a look here at a little closer. Or yep, it's like earlier this morning, this thing was down at $515, so it's practically added $200 to the price tag, and it just keeps blowing past all expectations and everything. Impressive. Up a whole 31% today. Now, this thing had previously been one of the few coins in four-figure price tags. Like, see, the highest it had ever been, well, this was back in launch in 2016, and it was $4,200. Can we expect it to go back to $4,200 again? I don't know. Don't know about that. And check this out. Like the previous bull runs, let's see, was $703 at the top of the January 2018 alt season. And then in the 2021 bull market, though, the highest it ever got was $319. So this is reclaiming some previous territory. It's basically exceeded previous bull market tops. Still down from its all-time high, but I don't know if it's exactly fair to compare it to the 4,000 price tag that it came out with. It's like, if its all-time high was the launch price, it's really hard to say, well, that was a fair price for it. Because, matter of fact, its all-time high was actually $5,900. So a lot of that could be VC effery, if you know what I mean. A lot of VC foul play there that caused that. But man, this thing could stay. It could stay hot for a long time. It could be a story for a long time, because what's I think is really making the privacy coin story a big deal, what's making that trade so attractive, is all this talk about capital flight and capital controls from places like France, from places like the European Union, and Keir Starmer's digital ID in the United Kingdom. These are all things that I think are attracting people to these privacy coins. Because it's not just Zcash that's doing it. It's also Monero is up a little bit. See, they're kind of riding in on the trade there. Not up as much. But still, it's catching a very fancy bid here, up at 372. Dash is also doing that. Not DoorDash. Get out of here, DoorDash. Let's see, how are they doing here? Yeah, up on the year. One of the few coins up on the year, and they just started their run right around the same time at the end of September. And man, look at that candle. Phew. But here's like the real surprise, and how you know it's a fact here that the privacy trade is a big deal. BAT token, basic attention token. Look at this guy. They've been down and getting beaten down really hard all throughout this bear market year. You know, starting in February, just been constantly getting kicked in the teeth. And now it's coming back. I was like, let's see, the lowest it had gotten here was this 11 cents. And the highest that this thing had been, this was back during the 2024 bull market top, 35 cents during that cycle. But this thing has been higher. It's been above a dollar here. Yeah, it was $1.92 in the 21 cycle. And why is this a privacy token? Well, it's because it's connected to the web browser Brave, which is a privacy browser. So that's how you know that the privacy trade is a thing now. How are the RH assets doing? Well, it looks like they're doing pretty good here. Man, they got a lot of ground to make up here and everything. But from what we see here so far, it appears
It's all coming back.
because we got some gains here. Man, to see him pulse back above the 4 zeros and a 3, that is cool. We like that. I think that to really say we're back, we got to have Hex on Pulse Chain above 008. And then Hex on Ethereum, that got to be above 003. And then we can start saying, well, yeah, it's back in contention. And speaking of that, there is an announcement that we are awaiting from Richard Hart. I am keeping an eye on it, and we will cover it live if it gets released here. Now, what's going on in TradFi land? On CNBS, well, the traditional markets are down. Here is some really good news, you guys. Crypto is popping even while traditional markets are down. The thing that had basically said was like the dominant force that if this did well, we would do okay. If this did poorly, we would do terribly. It looks like that correlation has been severed, at least temporarily here. And a lot of it's just due to consumer sentiment being low. The government shutdown is now finally starting to affect the traditional markets. And also AI is turning out that people are starting to realize what I talked about on Tuesday, that, yeah, this whole AI thing, it's a great big overhype. If you didn't watch Tuesday's update, real quick update that I was doing just because we didn't get to do our weekly hexagon spaces, so I didn't get to give the macro update. But what I talked about on the Tuesday stream is just that AI is turning out to be such a giant overhype. It's not anywhere near as powerful as people think that they think that it is. And even, if it could be that good, the big problem that we're going to face here with AI is that we don't have the energy here in the United States to power it. We're going to need a lot more energy than we got. We don't have enough oil here in the United States. And really what we'd want to use for is we'd want to use nuclear energy. But to get a nuclear power plant up and running, that process itself could take 7 years. So even if this AI thing is as great as everybody says it is, these data centers need a lot more energy than the U.S. is currently capable of giving them. So you got that problem. And then even if it did work out, it crashes the economy. And all these companies that supposedly will get rich off of AI will crash too. Because here's what they keep telling you. I was listening to Impact Theory. Tom, I forget how you pronounce his last name, but Tom is going on and on about, AI is going to put all these people out of work. They're going to put you out of work. It's going to put you out of work. It's going to put your mother, blah, blah, and everybody's going to lose their job. Well, what do you think happens next? So all these companies, they bring in a bunch of AI robots to do everybody's work, and they fire all the humans. Okay, well, what's the next move? Then what? Those companies go bankrupt because nobody can buy their products or services because nobody has a job, nobody has income, nobody has money to buy your stupid AI-created products with. That's how short-sighted the whole TradFi market has been over this AI trade, acting like complete idiots over it. And now they're starting to realize, hey, this AI thing might not be so good. Guarantee you that's what's happening here in the TradFi land. Now, what's a more legitimate story for us to cover here, a more important story that relates more so to crypto than anything else, is this story. This is a pretty sight to see. The dollar index is finally going back down. Look at this right here. These two sharp drops, like at the open today, going for, or back on the November the 5th. Remember, the 5th of November, the DXY and plot. I know of no reason why the dollar index should ever be forgot. And then yesterday took another, and then this morning another, and it's down to 99.5. It is absolutely critical that we keep this dollar index below 100, because if we keep the dollar weak, that makes risk-on assets, crypto in particular, strong. There was a guy who once dared to call me out saying, crypto goes up for other reasons and they're not the DXY. There's no relation between crypto and the DXY. And you don't hear much from that guy anymore, because not only did I show him the charts that prove my point, but recent history here the past couple of weeks has been proving my point too. There's a reason why all those bears chickened out of debates with me. So we want this thing to keep going down. We want it to go down to the low 90s, possibly the 80s as well, because that is where we get our real big bad bull market. Now, why is it going down? Anybody want to take a guess at why it's going down? Yeah? Anybody got any ideas? I bet somebody might have an idea, right?
A legitimate question, young man, deserving a legitimate answer. Now then.
I think somebody might know out there. You throw it in the chat if you do. All right? Because it's got to do with something that's very timely in the news. And it's a very big story. You can bet it will be a big story like when the resolution to it comes out. You can absolutely bet. We'll come back to it. Here. Yeah, take a look at the interest rate environment. Let's refresh, make sure I got the latest ones up here. All right, so a lot of volatility in that 10-year treasury. It was down below 4%, then it went up to 4.15 yesterday, and then came back down. And now it's down to 4.07. A lot of haywire and volatility in that 10-year treasury. That tells us that there's a lot of action going on in the treasury markets. When there's a lot of action going on in the treasury market, that means there's some big seismic shifts coming economically. Big seismic shifts coming. Now, what I'm hoping is going to be the case here. Here's what I think is going to be the real deal with these treasuries. you will see that 10-year go back up and go back up pretty high. That's going to be when the Federal Reserve has to step in and turn on the money printer. And when they turn on that money printer and start buying assets at the long end of the curve, meaning the 10-year treasury and higher, when they start doing that, I'm going to come on here and we're going to have a celebration stream. It'll be start of the real bull market stream. And we'll be popping champagne. You'll see me on my stripper pole dancing. That's going to be one fun stream when that happens, when we confirm it. All right? So here's what I can do. I already told you guys, like, hey, when I think it's the top of the market right here, I'm going to give you a speech about why you never let anybody know that you have money or that you made money in crypto. So watch out for that. Like, when I give you that speech, that is the end. Probably be my last stream as well, because I tell you what, this is my last market cycle. I don't have the wherewithal to do this anymore. Oh, I just noticed there's a bug crawling on the wall over there. I'm gonna go catch him. What kind of bug that is? I hope it's just a moth. But this will be my last stream, or my last cycle is what I'm saying. So I'll give a stream there, but also when the bull market starts, I'm gonna give a stream specifically on that, where all we do is celebrate and we pop champagne bottles on that. Y'all will know here. All right, 2 seconds here. Let me just take care of this bug on the wall. So while I'm doing that, y'all check this out.
Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible.
All right, sorry everybody, had to go take care of that. It was a spider. Oh wait, he's back. Hang on a second. Hey, I think he's dying though. Yeah, he definitely dying because he got the spray. It was like, it gets off the wall or else it gets the spray again. I'm watching him right here, but I gotta keep my head in the game here with you guys. Okay, so Cash, you'll miss me. Here's the deal. Like, it's not that I'll stop streaming. I just won't be talking about crypto anymore. Maybe I'll still stream. It's not about crypto. It's like, you got a shelf life for how long you can talk about the crypto here and everything. Can't talk about it forever. All right. And also, like, I have a hard time just like coming up with enough stuff to talk about on the amount of streams that I do. I don't really stream that much because there's really not that much happening in crypto to stream about. Now, let's see. I was also looking for another story that was real important to cover. Did the Richard Hart announcement happen yet? Don't think it did here. Yeah, still no announcement just yet. Waiting for that there. You guys tell me what you think the announcement is going to be. And also tell me why you think the DXY is down, because that is pertinent to today's top story. We'll be looking into that as well today here. Yeah. Also happening in the world today is quantitative tightening. We got an update on that from the Federal Reserve. We'll talk about that a little bit later on today. But let's see. Hang on. Really got to take care of this. 2 seconds. Got to take care of this bug here because he's moving again. All right, sorry about that. I'm not sharing my screen anymore. I'm sorry, I meant to keep sharing my screen here. You think it's it's about the wallet, Mr. Barbarian? That's what I'm thinking there too. But imagine somebody would have guessed that by now. And there's prizes if you guess it. And I think that if you guessed it correctly, you would have gotten the $10,000 prize or whatever it is. All right. So, another thing here. If you want a copy of this book for free, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, I will give you a copy of this book for free. All you got to do is head on over to my Substack, reinventideal.substack.com. That's reinventideal.substack.com, and just click right here in the middle where it says free gift. And then come on down here and subscribe. And I will send you a free copy of this book in the email, and it costs you absolutely nothing to subscribe to my Substack. It is 100% free. All right. So, yes, the story today here is this thing that Richard Hart has been teasing, that he is launching a new project. Says details within 24 hours. Well, it's been more than 24 hours. It's been 26 hours now, and still no announcement. And he put on like some prizes to try to motivate everybody into guessing what it was, but so far nobody's guessed it. All sorts of ideas thrown out there, but no one knows. I'm thinking maybe it could be something to do with privacy. That's what I'm thinking it could be, is since privacy trades are the deal now, and since capital controls are coming to the European Union, and since there's going to be a lot of capital flight all around the world, a great way to get people interested in his ecosystem is if he did something with privacy. I think that is probably what the play is going to be. All right. Let's see the Sonic story we covered yesterday. Here's an interesting thing here about AI and like why the AI trade is not working out so well in stocks anymore and why stocks are down today. This is something that comes from Lance Roberts, who is a TradFi analyst, advisor, whatever you want to call him. But this was very interesting to me here about this, is that now we got AI debt or bonds that are specifically related to these AI ambitions that different companies have, such as Meta. Now, Meta, I kind of like to make fun of them, and I think that I don't really have a lot of regard for Mark Zuckerberg or Facebook or any of that stuff, because when it comes to Meta, I mean, they really blew things. They really blew things for themselves last cycle with the stupid metaverse thing. Y'all remember the metaverse and how that was supposed to be the new internet, the way of the future, and we were all going to be using it, and we were going to be going to concerts in the metaverse? And it turned out to be one of the dumbest ideas, the biggest wastes of money that almost destroyed Facebook on its all by itself. It was an absolute joke. And all the cryptos that were related to it, a lot of them died. A lot of them went down real hard and never came back. And I'll imagine that they are coming back. And the whole idea of a metaverse, I mean, what the heck? All it was is it was just like it's just like a Zoom call. It was all that it was. That's all you could do with it. Like when you're on a Zoom call, you're on a version of the metaverse. All it is it's just, okay, there's this virtual interactive chat room environment where you can have an avatar. And that was it. Maybe it was a little bit of a fancier one because you could customize like your 3D avatar. But that was it. I mean, I've seen video games. It reminds me of like, was it Diablo 2? Maybe it might have been Diablo 2, or it might have been Champions of Norath. That's more confession time right here. Also, when I was in high school, in addition to being a juggalo, I was also one of those kids that played like those dungeon hack and slash games. Yeah, Dungeons and Dragons and everything. So when I played, I think it was Champions of Norath, we were able to do this thing here where we could play with other people online, and it was like one of the first games that you could do that. It was back in like PlayStation 2 days, all right? Like 2004 or so is when I think it all happened. So that's how old I am. And like, Mark, your metaverse idea was invented all the way back in 2004. It's not new revolutionary technology. It's not special. It looks like good old Zucky is going to ruin himself again with this stupid idea he has that he's going to make his company be the authority on AI, and he's pissing away so much CapEx, almost like he wants to go down in a blaze of glory. All right? So here's the story about AI-related debt. Meta has parked $30 billion in AI infrastructure debt off its balance sheet, echoing Enron-style financial engineering. Yeah, to kind of get it, we don't want to get like too deep into the weeds of like what Enron was doing with their questionable accounting practices. We're not saying that Meta's doing questionable accounting practices, but this is an enormous potential problem here for all of these companies, not just Meta, but any company that's issuing bonds related to AI. Because here's the deal. You issue bonds to raise money to go buy chips or computer parts or whatever. Those bonds are 5 to 10 years long. But the chips and computer pieces that you use to buy, that you use the money from those bonds to buy, could be obsolete in 3 years. And so you'll be paying on debt for purchases of items you made years ago that are now obsolete. This is an absolute stupid idea. An absolutely stupid idea. You shouldn't, I mean, technology companies in general should not be issuing bonds, unless you're Microsoft, because you got a AAA rating. I mean, for the most part, like, corporations need to act their corporate age. And what we mean by that here is, like, if you're a very high beta tech company and you're not a very old one, you know, you're like 10 years or a little bit longer, you shouldn't be issuing bonds. You should be issuing equity, because certainly your stocks are going to perform a lot better than your bonds. Whereas, you know, if you were a much older company, Microsoft, you've been around for 30 years or more, well, yeah, it's perfectly fine for you to be issuing bonds because you have a AAA credit rating, so you're going to get a very low interest rate on the bonds that you issue, and people are going to flock to them for safety. They're not expecting your stock to outperform. So seeing a company like Meta not acting its corporate age is highly concerning for anybody that has anybody's a stakeholder in Meta. This is something to be very positive or optimistic about here. Benjamin Cowan, if you don't know him, he is a 4-year fundamentalist. He still kind of sticks to the 4-year cycle, saying, hey, the end of the 4 years is when the bear market begins. He's pointing to this here. It says that the way the price action and the way that the Bitcoin dominance and the way that interest on social media has been for this cycle so far, it's not been anywhere like it has been previously in lots of other cycle tops. You see, like in the red areas here, or where it's like red, yellow, and orange, and here, this is the 2017 top. So, of course, when Bitcoin was at the top of its cycle, social media buzz about it was higher than normal. And search engines and everything, search engine volume. Same over here in the 2021. Like, this was the first top in April, May, and then here was the second top that came in the fall. Social media buzz was a lot hotter back then as well. Search engine volume was a lot hotter. But notice throughout this entire cycle here so far, it's been very cooled. Not a lot of buzz going on about Bitcoin or cryptocurrency in general. Now, what Benjamin keeps a very close eye on, which I think is a good thing to keep a close eye on, is the Bitcoin dominance, because that can really tell you where we are in this cycle here. And if we look at Bitcoin dominance, imagine it's probably dropping by now. Well, not so much. It's at 59% right here. We really want that thing to kind of get above 60 or above 62, because if it gets above 62, it'll go a little bit higher. And once it puts in a second top, that's usually when the alt season begins. That's how it's historically been here, is that Bitcoin has hit two tops in Bitcoin dominance. Like, back in last cycle, it hit one in 2019 at 69. And then later in 2021 at 67 or 69 again. And then, of course, in the 2017 cycle, it had a lot of it hit it a bunch of times. Right? At first, it was at 87%, and then kicked right back up to 62% before plunging down to about 30%. And that was it's also the time. Like, this is how you know we're getting close to the end of the cycle here. Is like when there is a crossover between the altcoins and Bitcoin dominance. And it's like altcoins x Ethereum. It's like when that crossover happens, definitely we're at the end of the cycle here, because that crossover doesn't last for very long. So that's something worth watching out for. And Benjamin Cowan pointing this out here to us is incredibly bullish to me here, because he is a 4-year fundamentalist. Oh yeah, this was a story that stood out to me here. You guys know who this is? This is the founder of Zcash, believe it or not. He's got a face that only a mother can love, right? Not a very pretty person right here. I imagine also one of those guys that thinks he's a woman and probably insists on being called that. Like, if you talk to him and you're like, "Hey, sir, it's ma'am." You ever gotten a "it's ma'am"? Because here's somebody that'll probably give you one of those. But check this out here. Like, all of the hate that our founder gets, well, look at this founder right here. His coin is doing just fine. Just fine. We got nothing to worry about with our founder. Like, if I got to choose between two coins, and it's like one is founded by this person, and then another is founded by a guy who's on the Interpol watch list, I think I'll go with the Interpol watch list. All right. Is this a guy that I see some cleavage there? Let's turn on the volume. Oh, yeah, definitely a man's voice. All right. Now, NVIDIA is taking quite a drawback here today. And again, it's all back to the AI trade turning out to be not what everyone thinks it is. At least not when it comes to stocks. They could keep running up and could keep running up higher. The market could stay irrational longer than people can stay solvent. But now it's down 16% since Monday's high. What was it that had it keep going up for as long as it did when, like, really the facts haven't changed? I'll tell you what, a lot of it's just got to do to what we call the passive bid. That just means that as 401k and 403b contributions keep coming in each week and the remittance keeps coming in, what that does is that just keeps pushing the price up almost indefinitely, because those investors in the 401ks, well, they're not sitting there picking specific stocks. They're just throwing it into an index fund, and the index fund puts the most money into the stocks at the top. So it's a self-reinforcing mechanism. However, that passive bid and the gains from it can't go on forever, because as it keeps getting higher and higher, it requires more and more money to keep pushing it up higher. And you get to a certain height where the money coming in is just not enough to keep pushing it higher. So I think that this might have been the end of the line here to the passive bid. Oh yeah, this here is a chart I wanted to show you to kind of like go over my theory, which we'll get on to a little bit later here. Let's check the market here again. Everything is still looking pretty nice here. Very, very nice. So, ain't nobody said anything about DXY here and why it's down. And I'll tell you exactly why I think it's down here. The reason why is because of the Supreme Court case
on Trump's tariffs. It looks like the Supreme Court is not going to let those tariffs fly. The justices appeared very skeptical of the legality of those tariffs. And it is possible that they could rule them unconstitutional. Because here's the thing, is like taxes, only authority to levy taxes on anyone rests with Congress. The president cannot unilaterally levy taxes on anyone. And if the Supreme Court rules that tariffs are taxes, or they come to agreement on that, well, that means that they are unconstitutional and they're going to have to get reversed. And if those tariffs get reversed, they may have to refund all that money. And if that happens, well, one, the Treasury General account goes straight down to zero. And then two, the fiscal deficit, the federal budget deficit, is going to get a lot worse. They're going to add like $1 trillion to the federal deficit. That will absolutely destroy the dollar and the DXY. It will absolutely destroy it. And you'll see the 10-year Treasury go from 4% to over 5% in just one day. Probably even shorter than that. Probably within like it could happen within like a few minutes when panic sets in. And if that does happen, I think then they're going to have to do an emergency meeting down at the Fed and turn on the money printer. I think they're going to have to in a situation like that. And maybe this was Trump playing 4D chess the whole time with these tariffs, was to do something that he knew was not going to fly past the Supreme Court and was going to get reversed and cause a situation like this so the money printer gets turned back on. Maybe. I don't know. I mean, I can't read the man's mind. It'll tell me what you think, but this is why the DXY is down, just on like the possibility and the thought of the tariffs being ruled unconstitutional. Because if they do get ruled unconstitutional, and if they do get refunded, this thing is going to plunge, and it's going to plunge real bad. All right. Now, here's the deal. All right. Here's what I say about this. I don't think that they will unilaterally go one way or another on it. I think what they'll do is they'll come in and they'll say, well, these tariffs are okay and these tariffs are not. And this is okay, that's not okay. And you don't have to refund all of it. You just got to refund some of it. I think that's probably a likely outcome. That's a likely outcome. However, if we check the betting markets, what they're saying is that they think that the Supreme Court rules against the tariffs. They think that will happen. Now, I don't want to root against the president. I'm not rooting for him to lose, and because it would be a very devastating blow to the president. And I don't want to see something like that happen, because it would also be like very hard on the reputation of America internationally. But if it does happen, the market's going to get really nasty for a few days. But if they turn on that money printer, well, then it's the best thing that could possibly happen to us. Because, just from the reaction of what the markets are going to do from those things being ruled unconstitutional from a wide fiscal deficit, the bond market doing what it does, I do not see how they could not turn on the money printer. I do not see how they could not ramp up quantitative easing. Because $10 trillion of Treasury debt is getting rolled over, refinanced, and newly issued next year. You can't have interest rates where they are at right now and go through all of that without really hurting the entire country, because we're talking about a death spiral. And that hurts everybody. It's not just the government that gets hurt in that. That hurts everybody participating in America. Now, a lot of people out there are saying, well, low interest rates and quantitative easing is just welfare for the rich, which is true. It is welfare for the rich. But nobody benefits at all from a death spiral in the national debt. That will hurt everyone, rich and poor. We don't want that. Now, what this chart here shows you is all of the different altcoins, some of the big ones here,
I mean, here's Dogecoin, Avalanche, Litecoin, VeChain, Sui, Render, Polkadot, Decentraland, and Artificial Superintelligence or Fetch. It shows all of these coins here. They really hit a new high in December and have been down ever since. What does that tell you? Well, what that tells me is that 2025 is the bear market year. That the end of 2024, December, was the top of the market. Yes, Bitcoin hit a later top this year, but alts didn't go up with it. Back in 2024, everything seemed to make sense to me because, yeah, you had Bitcoin going up and you had the rest of the market going up with it. That's how it should be. That's how it makes sense. That's how markets have behaved previously. That is normal market behavior. What we've seen this year has not been normal. Unless we're talking about a bear market. To me, that makes the most sense. That we've been in a bear market all year, and the reason Bitcoin is doing just fine is because it has all of this institutional investment keeping it up. I don't think Bitcoin goes into bear markets like it has before ever again, where it gets drawn down 80%. I think it gets drawn down maybe 50% in the future. I don't think it goes down 80% like it has before. So the way I'm seeing this here is that this year, 2025, was the bad year. And once this year is behind us, it's nothing but good ahead of us. Because when you get that money printer turned on, nothing matters with time. All right, the whole 4-year cycle thing, it is not more powerful than the blunt force of the Federal Reserve's money printer. It is not. I don't care who is telling you that it is. It absolutely is not. Because that is an incredibly powerful force, the Federal Reserve buying assets like 10-year treasuries and everything. You need something like a nuclear bomb going off or nuclear war happening to overpower a force like that when you're talking about the money printer to the world reserve currency. All right. And also, when you look at that 4-year cycle, I bet you guys didn't know this here, so I'm going to share this with you. You know that the 4-year cycle actually predates Bitcoin? That's right. We could look at some previous decades of stock market history and find it going up, and then 4-year marker hit, it starts going down. Then it starts going back up, and once the 4-year marker has hit, it starts going back down. It was in the 80s and I think the 90s when that had happened, the 4-year cycle. So that tells you that it's got nothing to do with Bitcoin, that there was a greater force in the world markets that was causing this. Because you can't say that it was related to Bitcoin's halving because Bitcoin wasn't around. And you can't really say it now because now the halving produces smaller block rewards, so it matters a whole lot less. Man, a halving going from 50 Bitcoin rewards to 25 Bitcoin, that's a big deal. But going from 3 Bitcoin to 1.5, that's not a big deal. So, when you have a greater force that pre-existed Bitcoin, and then Bitcoin's invented, crypto's invented, and it rides the same wave, well, what could that force possibly be? I'll show you exactly what it is. What the force is that causes any risk asset to go up is this, liquidity. You're looking at it right here, Fed net liquidity. This has been the cause of all of it. Why is the market sucking so much lately? Because the Fed net liquidity lately has been sucking so much. We need this trend to reverse, or else this nice pop that we're getting could reverse as well. Let's see, this is 2 weeks behind, so we don't know if it has reversed here. But a couple things that we do know is, let's see, is it this one? That's this one right here. To kind of go on, like, why is Fed net liquidity so bad? Why is it so low? Is because this is getting really high. What this is the Treasury General account. Basically, when we pay taxes or when they collect tariffs, it goes into a savings account for the federal government, and that savings account is housed at the Federal Reserve. So it is sucking money out of the economy, and it just sits there. It doesn't get invested in anything. It is not circulating the economy. It's just sitting there. It may as well be buried under somebody's mattress. So it's not really good in helping the economy at all. It's not causing any circulation or any transactions. It's almost $1 trillion. Like this, it says here it's 957 billion. So practically $1 trillion. Now, what happens when this starts getting drawn down? That's when assets go up. Because take a look here at the beginning of the 2021 year, all it did was go down. It was getting spent because they were sending out stimulus checks and everything to everybody during the scamdemic still. And as it got down to its low right here, that was where we got the final top about a month later in 2021. It retested that bottom there as well. Or it got spent again. It doesn't really retest or anything. And that gave us about another month or two for alt season of 2021. The reason this is building up right now, though, is because the government is shut down. They're still collecting taxes, but they're not spending that money. That money's just getting sucked out of the economy. It's not circulating. We need it back in the economy. We need it circulating because every dollar bill that circulates in the economy eventually ends up in a financial asset. That's the final destination of every dollar printed. If you memorize that phrase, the final destination of every dollar printed is a financial asset, you will do very well in any investing that you do. Because what that tells you, eventually a dollar bill that is circulating through the economy is going to wind up in the hands of somebody who wants to save it. They'll either save it in a financial asset or they'll stick it in the bank, and the bank will stick it in a financial asset. And even if they invest in a super conservative asset, it crowds out investment and forces other investors to invest in more risky stuff. That's how it works. This is also the cycle that has predated Bitcoin and has caused previous cycles to be 4 years. It is also why this cycle that we're in is being delayed and pushed out. Or maybe you could say it's why the cycle got shortened and the top was December 2024 and 2025 was the bear market year. You could say that too. Because of what's going on here with the national debt and refinancing it and the Treasury General account and the collection of taxes and how that money is yet to circulate throughout the economy. It's all that it is. It's nothing magical. It's not some astrological force causing the 4-year cycle. It's not numerology. It's not sorcery or whatever you want to call it. And it's got nothing to do with the Bitcoin halving. It's all related to the flow of money. And my book, Decrypting Crypto, explains that to you so that you can then explain it to your friends when they ask you. All right? Because, one thing you don't want to do here is, like, you tell a friend asks you about crypto. Like, hey, I see that crypto thing that you're into, and I'd really like to get into it too, but I just don't understand why it goes up. Can you tell me why it goes up? The worst thing you can do is not have an answer and just do this. The best thing for you to do is to be able to say to them, yes, I can tell you exactly why it goes up because I read Cairo Copeland's book. It's called Decrypting Crypto. And here, why don't you borrow it and you can find out exactly why it goes up. And then at the top of the cycle, both you and your friend go, woo! Because the top or the turnaround is coming. It is absolutely coming. I'm not ready to say that it is on just yet. I'm not ready to say it's on yet, but I am ready to say here that so far it looks as if
It's all coming back.
All right. And I will show you some more information regarding to that in a little bit here. But first, a little public service announcement.
You're listening to a Reinvent Ideal live stream. The phrase Reinvent Ideal isn't just clever wordplay, it's a manifesto. For decades, society handed us a dusty old blueprint for life. Work 9 to 5, climb a corporate ladder, buy a house you can't afford, marry young, pump out kids, spend 40 years in a hamster wheel, and if you're lucky, retire at 65 with a gold watch and arthritis. That's the ideal we inherited, but it's a lie. A boomer-delivered illusion that made sense in 1970. But in today's world, it's a recipe for debt, burnout, and disappointment. Reinvent Ideal is the antidote. It's about rejecting the outdated script and designing a new one. A life where freedom, autonomy, and leverage replace status chasing and financial enslavement. Where your ideal isn't dictated by suburbia and social media, but what keeps you sane, sovereign, and alive. Instead of status symbols, we pursue rare and in-demand skills that buy independence. Instead of debt-fueled materialism, we choose minimalism, shedding liabilities and obligations. Instead of working to death, we embrace crypto and investments that multiply freedom instead of shrinking it. The new ideal isn't about fitting into someone else's mold. It's about building a life that maximizes your time, choices, and sovereignty. Reinvent Ideal is about giving yourself permission to redraw the map.
All right, little heads up right here. This is a visual of what the prediction markets are saying about the Supreme Court's ruling on the tariffs. They only give it a 35% chance that the Supreme Court rules in favor of the tariffs. So it's very likely that these things could get ruled against, and then much of the tariff money may have to get refunded, and the strength of the dollar nosedives just like you see this chart nosediving. That could happen. And when that happens, you can also bet, though, that the risk-on markets are going to go down too. And probably go down pretty bad. Like, what you saw in 1010 could easily happen again. But don't panic there just yet. Matter of fact, if you see that happening, there's one thing I want you to do.
Control yourself!
You gotta stay put. I know it's a very difficult thing here to do. All right? This, by the way, this is not me telling you exactly to do that, or because I'm not giving you financial advice. I'm not giving you trading advice here or anything. Even though, like I'm saying, this what I'm saying is this is what I'm doing. All right, because here's the deal: if all of those risk-on markets, stocks, crypto, if they all start going down, and it's due to the ruling. What you got to bear in mind here, though, is that the Federal Reserve is likely going to have to step in if the bond market starts going down. You see, we can't have the bond market decline and have a country. That was the deal with, like, why did they immediately send rates down to zero and turn on the money printer during the pandemic? Why did that happen in their emergency meeting March 2020? Because that was a very bold action to do. Why? Well, it's because the bond market was on fire. The bond market was going down. We can't have that. We need bonds to have a functional economy, to have functional markets, because bonds tell us what gravity is in the markets, in the financial world. It sets the interest rate at where it should be. And if the price of bonds dramatically drops, that means the interest rates or the yields on them go exponential, or not exponentially, but much, much higher. Much higher. I mean, to see bond yields gain 10% in a day like we did back during the pandemic, that was a huge problem. Absolute chaos. I mean, I remember I was working in the bond department at Fidelity at the time, and I was placing trades for treasuries, and we couldn't get the orders filled. That's how insane it was. Matter of fact, is there anything I can point to any charts I can show you to illustrate how bad it got there? I mean, I guess we could look at was it Fidelity long-term treasury fund should show something strange. It should show the pandemic drop. Yep. Here we go. Let me take a look at it from there. Let's see. Does it have it? Well, actually, these long-term treasury funds, they did fine throughout 2020. I guess the fund probably isn't really like the best one to look at here for it. Unless we look at this drop here, but that was in 2019. As we want to look at is an actual bond price. Maybe I got one on this chart over here. If it goes back far enough. Because those bond prices, they dropped, and they dropped hard like they couldn't catch a bid. And guess what we could look at is the yield. Look at the history of the yield. Let's see, is this... Oh, it's going to make me log in to do it. Well, I think you guys get the point, though, of if the bond market is in trouble, the whole world is going to be in trouble. Because every single government uses the bond market. Every single company uses the bond market. Everybody uses debt. And if debt markets are out of control, the world's going to be out of control. And much of our economy, 80% of all the transactions in our economy is just refinancing debt. That's how important the bond market is. So if the tariffs are ruled unconstitutional and bonds take a plunge and the yields shoot up, the Federal Reserve is going to have to step in. Absolutely have to. Now, more news here on the Federal Reserve is they updated the balance sheet trends. It's always behind by a week. Now it's only behind by 2 days. Take a look at this. The Federal Reserve balance sheet, it's down a whole lot here for October. For the whole month of October, it had gone down dramatically right here. So now it's at 6.572 trillion. And halfway through the month, it was at 6.596 trillion. So a total of $24 billion has been rolled off of the balance sheet. That's still quantitative tightening, which is not good for the overall markets. It's probably why we've been sucking for the past couple of days. Because when they do this, they are literally extracting money out of the markets, out of the economy, as they do the quantitative tightening. However, in the long run, this is going to be good. Because the lower they get this balance sheet down, the more runway it has for them to increase it later. More runway it has there. So we don't necessarily like that they're continuing, and also that, the decline looks a lot steeper here. But it is going to play out in our favor later on when they reverse this and turn it around. Here's another thing to pay attention to. We also got an update on this here. This is the 10-year Treasury minus the federal funds rate. We want a positive spread between the two, because whenever we have a positive spread between the two, that means that the world is starting to make sense again. Because what you'll notice here is that throughout all of 23, and also like at the end of 22 here, like the height of the bear market, or like the absolute bottom of the bear market, from there, from the bottom all the way up to the end of last year, and also where we're at throughout the majority of this year, it's kind of been no spread between the two. Hang on, guys. Somebody's bugging me here. All right. There had been no spread throughout the majority of this year. There's been no difference. Like if you took the federal funds rate and subtracted it from the 10-year Treasury, there had been no positive number left over. It would be a negative number. That's not good. It's not good. What is good is if we take the yield on the 10-year, subtract the federal funds, and we got a positive number. If we got a negative number, that's really bad. But when we have a positive number, it basically just means, well, the world is making sense here, and the Fed is actually doing the right thing. We got a positive number now. It is a whole 30 basis points. A basis point, by the way, that's just a percent of a percent. That's all that it is. So 30 basis points, or 0.3%. Ideally, we want that to be higher, because you take a look here at like the previous bull markets we were in, that spread was a lot higher. It had gotten almost up to like 2.66%. And then also this here, like this chart, we want to show you to it just kind of one by one here for it to make sense. So this one, this line that you're looking at, the turquoise, I think it's turquoise. This is the federal funds rate. Now it is finally below 4%. It's at 3.86 now. It is lower than the 10-year Treasury, which is the gold line that I just added. That's good. We like that. Is it also lower than the 30-year Treasury? It should be. Well, let's add it in. The black line is the 30-year Treasury. Yes, there is a very decent spread between the two. That's really good. What about the 2-year Treasury? Not so much here yet. The 2-year Treasury is the red, and as you can see, it's still lower than the federal funds rate, and that really should not be. Because what that tells you is the Treasury market on the short end believes that the Federal Reserve is behind the ball, that the policy decisions that they're making are too late, or they're not where they should be when they should be there. And to really test this out, we got to add in the 3-month Treasury yield, which is the green line. And that kind of says that the federal funds rate and the 3-month Treasury are kind of right in line with each other. We got to get the federal funds below the 2-year Treasury rate, though, for the world to make sense again. And then when that happens, well, the business cycle can begin and really get going. That's where you'll see things like, you probably hear the ISM get referenced a lot or spoken about a lot. The ISM is highly dependent on interest rates. And right now, when the interest rates are kind of out of whack here, as this picture shows, only a little bit out of whack, not as much as it was before. But since it's a little bit out of whack, you can't get the business cycle going like we need it to. All right. So this is something that we want to really watch here, is the spreads between the Treasury yields and the federal funds rates. Let's check to see, did Richard Hart make his announcement here yet? Appears not. Still no announcement. Come on, Richard. Was hoping you'd be able to do it here while I'm on stream. It might not happen. All right, so anyway, 2 more things here to talk about today here. First is this whole Filecoin story. It's retracing a little bit, but I think that this thing is going to be continuing for a long time. And I'll tell you exactly why I think that. And why am I making such a big deal out of Filecoin? I'll tell you why. And that's because... hang on just a second here. I'm just going to take care of this. Okay. I'll tell you the reason why is because back in 2023, I predicted Filecoin would do this. And it was in a book that I had written about previously. And it's actually one of my best sellers. It's this book right here. Riches from Bitches is what it's called. Now, what this book is about, the premise of this here is, it is about the she economy. If you haven't heard that phrase before, Morgan Stanley did a study back in 2019 saying that most women are going to be single, most marriage-age women between the ages of 20 to age 40 are going to be single in the next 10 years. All right, but it's basically just saying, hey, marriage is going away. We live in a post-marriage society. And they call it the she economy because, men have always been working participants in the workforce, but now because women are not getting married, they're not being wives, they're going to be working for themselves, a bigger part of the workforce as well. So how do we invest? And Morgan Stanley was looking at it from the perspective of stocks and everything. And I did that too in this book right here. It's like, well, these are the stocks that I think are going to do well because of it. these are the businesses that I think are going to do well. Like if you want to be an entrepreneur and you want to get into a business that's going to take advantage of these changing trends of the she economy, this book tells you exactly why. It basically tells you how to exploit a entire new demographic of buyers or a new demographic of economic participants or economic participants that are going to have a much bigger role. How do you take advantage of that economic trend? This book goes into all those details. Now, however, to be a very good analyst in all of this, I also included a chapter in the very back that said, well, what if the thesis for this book is wrong? Like, what if Morgan Stanley is wrong? What if the she economy doesn't really happen? Like, magically, all these women decide, hey, we don't want to be working in corporate America or anything. We just want to be wives. What if that happens? Well, there is another play you could do in addition to any she economy investing to hedge your bets. And this was specifically what I wrote in that chapter. The idea that the she economy might not play out, how can you hedge your bets, or what would be an alternative investment to do that with? And I was writing a lot about AI, because a lot of the jobs that women are doing are white-collar work, and those white-collar jobs, a lot of it could be done by AI if AI does very good. Now, here's the thing. Like, a lot of people say, well, why don't I just invest in AI? Why don't I just invest in AI? Because it's going to do well, right? It's the future and everything. We sure we know which ones to invest in? No, we don't know which ones to invest in. ChatGPT or OpenAI is not even public yet. And, sure, you could have gotten into NVIDIA, but NVIDIA is in a downtrend right now. What I think is a safer bet, and I'm not recommending you do this here or anything, but I'm telling you what I'm doing is I'm just going to invest in energy companies because AI is going to use a lot of energy. All right. I'm investing in oil companies and nuclear energy companies specifically because they're going to be in demand. If not here in the U.S., it'll be in demand overseas because it's basically an AI arms race that's going on. Now, what's all this got to do with Filecoin? Well, in this book right here, I wrote about it. This was in 2023. Here's what I wrote here. It says, there's one more business/investment out there that is ripe for a parabolic run from AI adoption. Blockchain technology that supports it. Not all cryptos and their blockchains are created equally. Some have no relation to AI at all, but some have an intimate relationship with it. Decentralization that is characteristic of crypto is very welcome in the AI world because if some centralized company gets pressured by governments to play it their way, it could put investment in a tight spot. Imagine a blockchain powered by cryptocurrency that lets folks come together and share their unused computing power. Sounds cool, right? But I'm still searching for a coin or a token with a network that's beefed up enough to guarantee survival over the next few years. There's one cryptocurrency that has a focus on data storage. Filecoin is the big player in the decentralized data storage world, holding the crown when it comes to storage capacity and total data. This was 2023 when I wrote this, by the way. AI cannot learn without data. If that data's in danger because it's all stashed in one basket or the central data storage lord decides to mix things up, your AI could bite the dust. That's a big risk, which is why I'm shouting from the rooftops that AI need decentralized storage. That's why I'm steering clear of giants like Amazon. Don't get me wrong, Amazon's great, but it's a big centralized player following human rules, and that just doesn't cut it for an AI in need of a data host. If the government comes knocking, Amazon can simply turn off the tap, and that's a no-go in a censorship-resistant, decentralized network. Thanks to their consensus mechanisms and economic rewards, blockchains are your ticket to creating some collective sharing. That's why a decentralized data storage network powered by Filecoin is a must-have for the budding AI revolution. Can you trade it easily? Absolutely. Filecoin hit the trading scene in 2017 and has set up shop for major global exchanges like Coinbase. It's like a celebrity that loves the red carpet. It's an AI's best friend? I think it may be. Filecoin is a blockchain running on proof of space-time. It's the native cryptocurrency of the Filecoin network, and it's the kind of friend an AI needs. Bear in mind, cryptocurrencies experience a 4-year cycle. The first year is the bad year when nothing but losses occur. 2022 was that year. After that, there are 2 average return years followed by an astonishing parabolic blow-off returns. That one good year will likely be 2025 if current cycles continue as they normally have. And that's the only part of this that's not true so far. But hey, still a little bit of time left in 2025 to make that true. Why would they, though? Now, here's like saying, you ever read something that you wrote many years ago and realize, man, I didn't know that I knew that way back then? Yeah, well, here's what I knew back then. Something that I keep talking about here, the debt cycle. Don't forget there's also an elephant in the room. Governments. Since way back when, and even now, they've only had one way to deal with the nagging problem of too much debt and not enough productivity. Print more money. Every great empire or civilization out there can trace its downfall back to the debasement of its currency. Our modern situation is no exception. Money printers go burr when the government wants to make the economy look good. And an election year is occurring in 2024, so that seems motivation enough for the government. That was why 2024 was a great year for our bags now, wasn't it? But it's also a matter of they don't have much else to get the economy going again. Historically, governments used to, or at least benefit from wars to get the economy pumping. World War II is a great example of that. Other times, they may use or benefit from massive energy production to pump the economy. Most of history, though, they relied on the hard-working spirits of men and the strength of their backs to support the world. That is, until governments realized they could print money to pump the economy, artificial as that pump may be. The wars occurring at the time of this writing are isolated and not big enough to fire up the economy. And that's the Ukraine-Russia war that was going on when I wrote this, and the Israel-Palestine war. Where was I here? Energy production is vilified and suppressed. We were under the Biden regime. And women in America are... Oh, man, I'm going to offend some people. The women in America are fat and ugly, demotivating the men to work hard. Now, I got a premise here that, like, you need hot chicks to get the economy production going because that motivates men to go out and work hard and make money. And that's kind of like also the thesis of this book here. So because women are not attractive, or on the majority side, like most women are not attractive as they used to be, the men are not motivated as much as they used to be, which is why you see a lot of men that are dropping out of the workforce and becoming what they call NEETs or NILFs, basically just stay-at-home boys that live in their mother's basement. Printing money is the only tool the government has left to kickstart the economy. And that money printer going off is what correlates with the crypto market's bull run that occurs every 4 years since 2009. I'm not saying it's 100% causation or even 100% correlation. However, a flood of new liquidity causes asset prices to rise, even if they're worthless assets like NFTs. Filecoin is a useful asset. Not only would it get the appreciation from new liquidity, but it would also get it from investors attracted to it for its usefulness. And never forget, when the crypto 4-year cycle ends, you better get out fast because the plunge down is dramatic, fast, and very painful. All right. I wrote this in 2023. Nothing has changed. The use case and everything for Filecoin is all the same. I never sold my Filecoin. I have a whole big bag of it. I'm probably going to invest more into it for that reason. This book, by the way, is like probably my best seller right here. If you're looking for some ideas on how to invest in the changing demographics of our economy, well, that's a good place to look. Now, last thing I want to say here to you guys. Let's see. Where is the market at right now? Let's check our assets here. Okay. Hex on Pulse Chain is back to 007. That's good. And Pulse Chain is comfortably back above 4 zeros and a 3. Last thing I want to say here to you guys. It's been a very hard year, of course. Absolutely. Absolutely hard year. And with a lot of the coins that you're going to see making comebacks, it may be a while before the money that comes in gets to the coins that you're in, gets to our coins, gets into Sonic in particular, because it got beat pretty bad. Before that money gets into Hex, Pulse Chain, the RH ecosystem. The stuff that like us real degens like to invest in. All right? It may be a while before money comes to us. Do not be discouraged. Because how long have we been sitting on the sidelines watching stocks go up and up and up while we stayed down? How long have we been sitting on the sidelines watching home prices go up and up and up while we've stayed down? How long have we been sitting on the sidelines watching gold go up and up and up while we stayed down? A lot of that is going to change, and probably sooner than even I expected. I'm hoping. I don't want to say yet, but I'm hoping. And I hope that you guys will always remember who it was that was telling you, hey, things are going to be all right in the end. Who stayed bullish this whole time and didn't be calling for no bear market or anything. I mean, this right here kind of confirms for you, hey, there ain't no bear market coming. We're coming out of a bear market. But seeing everything else do well while we're down in the dumps, I know that that's really hard. But last night I was watching WWE. Or not WWE. I was watching, well, yes, it's WWE, but it was on YouTube. There's this channel, TH14. Really cool channel, TH14, because like what it does, it doesn't actually show you the wrestling matches, but it shows you the wrestling story. And the one that I was watching was Undertaker versus Brock Lesnar back in like, I think it was 2002 or so. Either 2002 or 2003, I forget. But Undertaker versus Brock Lesnar was a big deal because Brock was the champion at the time, and he was really on top of the game there. He was like the new hot thing. They even called him the next big thing. He was only 25 years old, and he had beaten Hulk Hogan. He had beaten The Rock and a couple of other big stars. Now he was up against The Undertaker, who he really was like the franchise of WWE. And this would be like the ultimate test for Brock. And I remember seeing like this face-to-face interview that the two of them did, where Brock Lesnar was basically being very hot-shotty, saying, oh, yeah, I'm just 25 years old, and I've wiped Hulk Hogan's blood off of me. That's how great I am, and I'm going to destroy you, Undertaker. And the Undertaker, he was not moved at all by any of this, not intimidated, not moved at all. He says, you done, Brock? Okay, great. Let me tell you something here. Yeah, you may have wiped Hulk Hogan's blood off of you, but the real test is when you have to wipe your own blood out of your eyes, or when you feel your ribs about to give in the middle of the match and you're still wondering how are you going to win this match. That is the real test that you got to pass. And that was a test that The Undertaker had passed, and also the test of time. That is the test that we are going through right now. Not just in the RH ecosystem, Hex and Pulse Chain, or Sonic, or any of these other degen chains, but all of crypto has been going through that exact test. Yeah, we may feel like we're missing out from everybody else, from TradFi and all the new hot shots and AI and everything. But we are ascending the test of time that other assets and other markets have already passed and have been accepted and legitimized and taken seriously now by the big money players. Now it's our turn. We're going through it. And we're going to come out of this like The Undertaker with long-term vision, long-term lasting power. So don't be discouraged by any negative price action that you've seen this year. or any retraces that are coming, because retraces are coming. They absolutely will come. They will get some retraces here, which be good, probably good buying opportunities. Don't be discouraged, though. Just understand how long this game goes on for, because next year, I think, is when the real cycle begins. All right? So until then, what I want you to do is
Control yourself!
and realize that
It's all coming back.
all right. That's my message there for you today. We'll see you next week.
That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here and told to shut the FUD up. Until next time, this is Kyle.